Tax planning is a crucial component in an overall financial plan, and most business owners are missing opportunities to legally and ethically reduce the taxes that they pay. Now, strategic tax planning can help you capture lost taxes and reinvest the savings into your company, employees, and your personal assets. Joining me is John Vrablic in Avon, Ohio with Tips for Reps. John has worked with manufacturers reps for 25 plus years in the areas of tax, investment protection, and succession planning. He's also the Executive Vice President of Advanced Business and Tax Planning for Aspen Creek Wealth. He has coined the phrase called the taxed to death life cycle. Well, John, please explain what you mean by the taxed to death life cycle.
So the tax to death life cycle, unfortunately, no one enjoys paying taxes, and throughout this, what I'll call cycle, you're taxed to death, i.e., you're taxed on your income. If you're fortunate enough to earn an income that you can save, then you're taxed on the growth of the investments. Then, when you take distributions from your qualified plans or IRAs, then you're taxed on that. And then when you sell your business, you're taxed on your business. And then when you sell or when you pass away, you're potentially subject to estate taxes. So you're literally taxed to death. And part of the tax planning strategies that we have try to mitigate, reduce, or eliminate the taxes throughout each of the phases of the tax to death life cycle.
Now talk about the difference between tax planning and tax preparation.
Yeah, great question. So a tax preparer is a CPA that prepares the taxes, receives the numbers, and once a year they say, here's what you owe in taxes. And there's no strategic planning. It's much more beneficial to have a tax strategist or do tax planning that throughout the year you're looking at what your income is, what potential taxes are there, what plans do you currently have in place, and what plans should you be looking at in order to reduce the taxes. So a tax planner is someone who strategically engineers a tax plan on an ongoing basis.
So what are the unique challenges and maybe some opportunities that are unique to manufacturers, reps, and business owners in general?
So the business owners, they're wearing so many hats, and I empathize with the business owners because it's a very complicated process to understand the tax laws. I think the Internal Revenue Code is thousands of pages, and to be able to run the company, take care of their employees, take care of their family, run their business, have CPAs, other advisors, it's a daunting task to try to put together an overall tax plan. So that's the problem, or the issues that they have is it's just a daunting task to be able to put together a tax plan, and you need to assemble a team of experts to help you through the tax to death life cycle.
So you've created what you call the 10 laws of tax managed planning. Why did you do that, and can you explain how this can benefit a manufacturer's rep and any business owner?
Yeah, so over the past 25 years, we've probably helped transition and helped 175 to 200 manufacturers, reps, and business owners in reducing their taxes and in some succession planning areas. So I wanted to synthesize all this complex and the daunting task that I just referenced and put it into a process that would make sense. And to the extent I feel that if you follow these 10 laws, which I'll briefly explain, but if you follow these 10 laws, your probability of success is going to be greatly enhanced. And the 10 laws of tax managed planning is basically an acronym for tax managed, which I'll briefly go over. First law is T, tactical company structure. Are you taking advantage of the structure of a C Corp, an S Corp, an LLC? Because if you integrate some of the planning and incorporate all of them, you could have a tactical business structure that could provide some significant benefits. A is accountant. Do you have a reactive accountant or a proactive accountant? Unfortunately, most CPAs are reactive, so you want to have a proactive accountant. X is expertise. In order to have a proper tax plan, you need to have a variety of disciplines that have expertise, such as tax attorneys, CPAs, pension actuaries, etc. So you need to have expertise in a variety of disciplines. M is minimize taxes and cost. Are you maximizing or minimizing all the taxes on your on your taxes? Another A is allocation. So there's a variety of strategies that have different characteristics. Some are tax deductible up front, some are tax-free on the back end. And A means you want to strategically allocate those strategies to take advantage of each of those areas. N is navigation. This is the most important piece, and is a theme throughout all my 10 laws. You need to be able to navigate the products, the strategies, the advisors, and all the legal documents. You need to be able to navigate that. G is governance. So when you put a plan into place and you strategically engineer it, you need to help have governance on it. In other words, each year the tax law might change, and you might need to govern that on an ongoing basis. E is estate planning. So that's part of the overall tax plan. And the last cycle of the tax to death life cycle is your tax at death. So do you have a proper estate plan in place? And then D, the last, is design, develop, delegate, what we call planning in 3D. So we want to put all that together by designing a plan, developing the strategies to maximize the plan and mitigate the taxes throughout the tax to death life cycle, and then delegate that to our third-party strategic advisors, such as the tax attorneys and the CPAs that we have in place.
I mean, finally, how does someone know if they have the right advisor?
I think you want to look at basically two of the laws that we talked about. Expertise. So does that advisor have expertise in areas of tax planning, investment management, protection planning, and succession planning? And can they integrate that into it? And can they help you navigate the variety of strategies, advisors, and products that need to be implemented in order to have a successful tax plan?
My guest has been John Vrablic in Avon, Ohio, and this is Retirement News Online.